Hi guys, welcome back to ValeTalks by Valetax. It's always a pleasure having you guys on the live. And today we're going to be looking at where the market is headed to because it's more important to understand the direction of the market, most especially the leading direction of the market, because that's the only way we can take advantage of trades in the market. But before we get started, I'd love to introduce my guest today. Denis, Mwenga, and Manesh Patel. Manesh has been my guest since episode one, and it's also an anniversary Monday for us, right? So today is episode 20. So we've been doing this episodes 20 times so far since we started ValeTalks, and I'm so happy and I'm so excited, and I feel privileged and honored to know that I've been anchoring, ValeTalks for the past 20 episodes, and you spread that across, months. So we've been how many months that in? That's about 5, 6 months since we started ValeTalks, considering the, weeks where we didn't have it. And Dennis is our new market analyst for Valetax, and he's been with us for about 4 weeks so far on Valetax. Thank you so much for joining us today again, Dennis. Thank you so much for joining in, Manesh. Today, we're going to be looking more on the charts and trying to really understand market conditions and where markets are placed currently, right? So, where are the markets headed towards? Okay, and I want to open the floor up with Dennis, because we're all analysts on the call, so I want to hear from Dennis so far from all his analysis. Where exactly do you think the market is heading to, Dennis, today?
Okay, so today basically, well, on an intraday basis, the dollar seems to be a little bit charged. I don't know whether you can switch to the dollar index chart.
Okay.
We can start with the dollar index, see how the dollar index is trading on the daily chart. But today, markets have been in a risk averse. So that should have been a boost for the dollar. So when you look at the dollar index, this is the daily chart, right? The daily
Yeah.
chart. Yeah, so the daily chart, overall, when you look at the daily chart, you can see we had that slight uptrend, but the markets broke lower. And currently, the dollar index is in a consolidation. If you look at that daily time frame chart, you can see the way the dollar index between that swing low and that swing high, trading between those two swings right there. There's a swing high there at around, um, you just look at it also. Yes, from my end here, so I can see clearly. Okay, so the dollar has basically been consolidating. I'm just trying to fire up my chart on my end. Okay.
So while Dennis is on that, Manesh, what do you think about the US 30 so far? Remember last week we had a conversation about the US 30 where you were
Yeah,
talking about the US 30 being more on the bearish side than the bullish side, like its counterparts, the S&P 500 and the NASDAQ 100.
Yeah, we just updated all our clients this morning, and the U.S. markets. You're looking at the U.S. 30, the S&P 500, and the NASDAQ 100. We're at major critical levels right now. So if I could get the charts for a sec, I'll show it to you. I want to show you something unique that we found real fast. Let me
Okay.
share my.
So, yeah, please do. Stop sharing so you could cover up.
Yep, and I'll just briefly go through this here. If you look at here, this is the U.S. This is a little different from this CFD products there, but if you look at the U.S. futures directly on the futures exchange here in the U.S. side, I mean, you do this here and you map this out here, we're exactly at the 127% Fibonacci retracement, which is very, very critical to determine if you're going to go to the next stage of a bullish trend. So you
Okay.
have that there. And then you also have here, same thing for the NASDAQ futures here, and you're exactly at the 127% retracement too.
Mm.
Then, so those are the two that have been leading this market up, since the beginning of this month, and we've gone up with huge volatility there. Our philosophy always is, if we go up with volatility, you always could come back down too with volatility.
Yeah.
That's what we're kind of at. And then if you look at the Dow here, we're right at this major level here. So we're seeing 3 of the 4 indexes, the futures products in the US side, at major resistance levels right now. So we're waiting to see what's going to happen this week. Are we going to break it, hold it? What are we going to do? But we may consolidate until probably April 15th. And at that point, we may start to come down if we don't start to come down now, because we've gone up too fast here. And this is typically not institutions or retail people in this huge movement up. It's typically the robots are sitting there taking control of this here. You typically have, retail people that were short start covering, so you have a short cover rally, but this is way beyond the short cover rally to a point a lot of the machines probably have taken over and brought this way up here. So we are looking counter trend. We're waiting for this thing to give us a signal to come down. So we may start to see that this week.
So what we're going to be expecting this week is most likely going to be we're looking for a weekly close below the previous weekly candle, right? In order for us to
Yep.
get more confirmation to say that we're finally going to see a correction, a counter trend correction back to fill in this huge fair. I see a very huge fair value area between the 25,250 and the 26,500.
Yeah, but you may not see that correction start this week. What you may have is just a little price action movement this week where there's not going to have much happen. Because if you
Yeah,
look at this here, we closed here and the high of the bar is very close away, the low of the bar is far away. So you may
yeah,
have an inside bar this week that starts to occur, and where the low of the bar is not far away at all, and then the following week we may go down. So we call it what we call a fake bar this week, where they're just playing games and going back and forth. So we're
right.
kind of expecting this week, maybe if it decides it wants to go down. Of course, it could keep on going up as it has been. And you can see here for the last 4 weeks, we've had pretty much no drawdown every week because we've
Yeah,
gone up with volatility here, 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 and here. We had a little drawdown here that was good. So the volatility is starting to come out because you're starting to see some more drawdown. But
yeah.
this bar is still big to a point. The volatility is not out yet to start this reversal process. So this week will probably be a mediocre week, probably inside bar with a lot of
Yeah.
volatility. But we're expecting sometime this month, this market to start coming down.
Yeah, that's valid. So what would be most convenient for a lot of traders would be to actually wait to actually see us get that inside bar, or we get probably maybe a huge engulfing, right? And
Yep.
then we see some pullback the following week before we start to decide if we're going to go bearish. But for bearish targets right now, so we have no confirmations for entry, but I can clearly identify some potential target areas. So we have this fair value area here with this huge imbalance candle, right? So we have
Mhm.
one fair value here. I think this is the most prices would most likely come to. This would have to take a longer time if prices at all would have to come all the way back to 24,000. But most fulfilling for me would be the fair value around the 26,500 and the 25 500 area, 250 area. This area is here are most likely where I would be expecting prices to sell back into before any further continuation for the buy sides, if possible. What do you think?
Yeah, and if you as we mentioned today, until this 1 hour gets taken out, we're not going to go
Yeah.
for a correction. So we're
Yeah.
really looking a 1 hour time frame here, and I'll just keep this simple for the users. If you look at Ichimoku in the charts here, until this gets below this cloud here on a 1 hour, we are not going to go for correction, and we still could go higher. So this 1 hour has to be taken out, and you have to get below the cloud here. Until you do, this market still could go up. So because we've gone up with so much volatility, the lower time frames start to have to look bearish. And the 1 hour is the key for the day traders to start thinking completely bearish, and then the swing traders to start going bearish too. So in order for the daily, weekly to start to go bearish, this 1 hour has to get below the cloud. Once it does, now we know that we're in a correction period. Until then, this market still could keep on going up.
Okay, so now we have a kind of a headway towards NASDAQ. So basically, if we're to summarize where the market currently is at for the NASDAQ futures, US 30 and S&P 500, is we are at confirmation point where we need a decision to be made if prices are going to keep going bullish or if prices are going to move bearish. But at every junction, we just need to wait for what the confirmation is going to look like overall. So Dennis, is your chart up? So let's see what you have on the dollar.
Okay.
Yeah, my chart is up. Let me share it.
Okay.
See what we have here on the dollar index. So I usually consider the dollar index as a nice starting point when we look at FX, especially the majors. The dollar index obviously gives us a feel of how the overall strength of the dollar is relative to other major currency pairs. So as you can see, we had dropped from 100 right here, this swing high here, sometime a couple of months ago. And we printed this low here at 97. And currently price action is getting caught between 97. You can see that. Let me just pull up my, that. So here, this zone here, so you can see this swing high here. This swing low, sorry, the swing low at 97, then the swing high at 98. We touched again a swing low here at around 97. So we revisited 97 again. And if you look closely, it's as if we printed some sort of a dodgy candlestick, meaning 97, that was a very strong base. Price did not manage to penetrate below it. And covering also this swing high here, from this swing high here to this swing high at around that zone at around 98. So that was the consolidation that I'm talking about. So overall price action is just coiling between 97 and 98. So if we zoom this in further to the 4-hour chart, yeah, we have the price will potentially, we can, looking at it from a perspective of forecasting, not really trying to predict, but we might potentially head all the way to 98 if the geopolitical conditions allow, if markets are going to continue being risk averse because of what has been happening on the geopolitical front. Remember, this is a market that is being driven by geopolitical narratives. Looking at it on the 1-hour time frame. So looking at it on the 1-hour time frame, earlier on today, we managed to break above 98.08098. So we had this breakout here. We coiled a little bit and then broke above, hit up to a high of 98.33. Currently, we are at 98.17. This looks like a pullback that is coming in, potentially giving us a good opportunity to go long. And obviously, if I decide to go long at this point, this will be a very nice area to have my stop loss. You can see it's what I refer to as a low risk kind of entry if geopolitical conditions continue supporting the dollar's strength. Yeah, that's what I'm looking at when we look at the dollar index overall.
Okay, so overall now with your analysis on the dollar index, what would be your relative speculation on pairs with the dollar pegged to them? So we're looking at pairs like the GBP USD, Euro USD, the AUD USD, right? So with the current analysis of your the XY, what would be the fate of the Euro USD and the GBP USD in the current market condition for the dollar at the moment?
So the other currencies which basically are really paired up with the dollar, they are also sensitive to what is happening, obviously, from from the perspective of the markets being risk averse. So you should see a slight weakening of the euro. For example, the euro USD, for instance. So this is the daily chart. You can see we had this nice print here, this huge candlestick right there, this pin bar right here. If we look at this from a perspective of the from the 4-hour time frame, so let's if I drop a trend line here, we hit a very nice resistance right there at 177, 1.177. And if we zoom this in further, change the time frame, sorry, you can see now. Now, I would anticipate to see price action, to see whether price action will break below 18.1. This is, excuse me, this is, sorry, this is 1.161, sorry, 1661. That base right there. So this base right here, this swing low, this low here, this swing low here. So that's swing low there. So that's where we are really caught up. We are caught up in this sort of a consolidation also as well, as you can see, sort of a consolidation. So any trader who will be anticipating a shift in market structure, for instance, would anticipate price to either break below or break above. But since the dollar index seems to be supported in this current macroeconomic environment, and currency pairs like the euro, the British pound, they are sensitive to risk sentiment. Therefore, we should see potentially euro USD breaking below that base right there, either breaking below that base or continuing to coil or breaking above it. But if you're looking at it from a perspective of just trading within that range, it will be interesting to see what reaction we will get at around 1.1666, or if price jumps all the way to 1.1757. So that's the euro dollar. The British pound, it will be pretty much the same picture also for the British pound. Let's just switch up to the British pound as well, versus relative to the United States dollar. Okay, so the pound has been interesting, of course. Remember, it's much more volatile compared to the euro. So we had this jump up, but then again, there's this candle here, this pin bar candle here, and also the same take. It's sort of looking bearish with a base right here. It's important to just highlight that base right there at around 1.34. This is 34.50 something. Let me just zoom in. Can't see clearly. Yes, 1.350. Quite a nice round number there to pay attention to how price will react at that base. If price hits that base after price was rejected here, around here. So we had that there. You see there was a rejection here, and currently we are drifting lower, currently trading at around 1.3541. So the next important point to note, 1.3450. That will be an interesting level of support to keep an eye on when it comes to GBP USD.
Okay, thank you very much. Thank you very much, Dennis. So what we currently are seeing right now, yeah, on the so if you let me, so I'm just going to share my screen, right? So just okay. So what we're currently seeing right now in the market, guys, are a situation of market decisions, right? So we have like Manesh clearly stated on the futures on the indexes, yeah, or like some people call it the indices, right? We have the US 30, the NASDAQ, the S&P 500. We're all seeing them at decision points. Same thing with the dollar. The dollar right now is trying to show technical strength, considering the fact that we've tapped back into the 98 and the 97 region, currently closing above the intraday resistance that's holding up the previous bearish structure from last week. And we're finally closing above it with a huge fair value gap above the DXY. So I'm just going to open up the DXY on my chart so that we also see that clearly, as Denis has clearly highlighted, right? So we have this holding floor currently at the 98, 97.7 region, right? And we have some sort of double bottom, not forgetting that we've previously acted as a previous resistance at this point and a previous support, clearly showing strength of this support area here. And when we go to our intraday levels, especially in the 1 hour time frame, which is your key intraday time frame as a day trader, right? Where you want to pick up your major structure and momentum from, we see that we are currently out of that previous bearish. So we've moved structures out of place from bearish into bullish with a very nice heads and shoulder pattern forming here. If you can see it clearly for the DXY, right? So we have this very good heads and shoulder pattern here, and we have our neckline sitting in place with prices currently forming a bearish engulfing on the 1 hour time frame. So we're most likely going to see probably another set of bearishness just right at the open of the New York session. If at all we're going to continue this bullish move to the upside. And we also have here holding up as a good resistance that we need to pay attention to, because this could be the last leg for this heads and shoulders regardless. But we want to see good price action here in order for us to continue the bullishness that the DXY is currently portraying in order for us to go higher. Now, how does this affect my own view of the market? So fundamentally, this week, we're going to be having the non-farm payroll on Friday, which is one of the biggest macro events for the US dollar. On Wednesday, just right before that, we have the unemployment claims, which is going to set precedents to having an understanding of what the non-farm payroll could actually look like. So these are events and macro events that we want to pay attention to ahead of the week. Now, what you're going to be expecting is you're going to be expecting some bits of slow markets today because it's bank holiday in China, Japan, the EU, and the UK as well, except for the US, which had theirs on Friday together with the Labor Day, right? So expect some slow movements in the market today and expect markets to catch up within the middle of the week, which is going to be from Wednesday, where a lot of the Federal Reserves are going to be having major news. So we have the EU have couple of high impact news too on Wednesday and Thursday. So expect a slow start of the week and expect this week at the start of May to be like a reconvening week for the market, and then by next week we'll start to see more movements in the market. But nonetheless, here are a few things that I'm going to be paying attention to for the week, especially on the XAUUSD. Okay, so remember, the market has lost a bit of correlation due to geopolitical tension, crisis, and most importantly, indecisions coming in from the fiscal arm and the monetary arm of the United States. So we see a lot of disconnect between correlations like we used to see, 2 years ago. So, but nonetheless, I'm seeing the bearishness of the XAUUSD, right? And one of the things you need to understand is the same way your Euro USD and GBP USD pay attention to the DXY. In some cases, sometimes the XAU USD also play, that same kind of pattern. So looking at the XAU USD on the daily time frame, we see the XAU USD respecting its bearish trend after failing to break, the 4,880 level, which acted as a very strong ceiling for the XAU USD over the past 3 weeks, and we're currently sitting just on this floor of the 4,500 level, which acted as a previous resistance, acted as a support. Prices, liquidated it and went back above it again, acted as a resistance and failed, to hold as a resistance long term, and prices went back above it to act as a support. So we're currently at this level. So my outlook for the XAUSD can be correspondent with the DXY. So if we do see a stronger DXY, right? We see a stronger dollar coming up this week. That is stating that we see a higher job report to support the strength, the current strength of the dollar on Friday. Then we most likely would see the XAUUSD also continue bearish to fulfill its bearish move on the weekly time frame to target as low as back into this imbalances of the 4,300, 4,200 levels for the XAUUSD. Remember last week, Manesh made mention of this previous weekly candle with a huge gap and failing to close bullish. Instead, it closed bearish, still signaling that there are possibly signs of bearishness on this candle, meaning that the bears would need to come back to revalidate these levels to show that they're no longer interested in moving downwards. So we're still going to be expecting the bearishness of the XAUUSD back into these levels. And with the strength of the DXY, supporting that move, then we're going to really see a huge flow of the XAUUSD back into this previous key levels from the weekly time frame. What do you think, Manesh?
No, I mean, definitely last week was critical for a lot of the metals, as we talked about from our AI forecasting tool. And they did close down bearish for the week, which is pretty much signaling that a lot of the metals are going bearish. So, overall, if you look at everything for us, we're bearish on gold, we're bullish on crude oil, we're bullish on Bitcoin. And then the US markets, we were bullish, but now they're kind of very overextended. So short-term bearish now for it to come down. And then as far as the dollars, you guys mentioned, Dennis and you, it's been consolidating, but pretty much the dollar looks like it's trying to get strong this week. So you got US dollar at a very critical stage, just like the S&P 500 and the NASDAQ. So this week's going to be very critical, like gold, like the metals were last week. So we're at that stage now that the markets are at a critical stage, just like gold was last week.
I completely
bearish.
Yeah, so we're seeing I'm still seeing possible opportunities for the XAUSD to go bullish a bit in line with the current correction happening on the DXY. Dennis, your analysis on the DXY shows that there is a huge possibility for the GBP USD to go bearish this week. And I'm in support and in with your analysis on the GBP USD, and here's why. So on the GBP USD, I have an analysis that I shared on the weekly outlook, which is the next move with Valetax. And if you're currently watching ValeTalks and you haven't watched any of our outlook videos on the next move, you should please head to our YouTube channel every Monday morning as early as 8 a.m. West African time, 8 a.m. South African time, and probably midnight Eastern Standard Time. You would see all the outlooks for different regions, and you should want to watch them because we give out trade ideas and possible entries and targets for the pairs for that week. The one for this week was on the XAUUSD by me. So I have this set up, right, Dennis? I don't know if you can see it on the GBP USD, right? So this is the major zone, right, for the GBP USD. This has been a very solid holding floor for the GBP USD, with prices coming back here before this falling wedge, and prices failed to stay below this level of the 1.33 hundred, okay, for the GBP USD. We also see this huge imbalance candle here that broke above it and also broke out of that wedge. So I have been expecting prices to come back to tap into this imbalance, right, to revalidate this key level again. Why? Because it has acted severally as a key level for the GBP USD. So I'm looking for a revalidation of it. So currently what I am identifying on this zone is we have this, what I like to call a local liquidity. Yeah, so this local liquidity, so this inducement of buyers trying to move to the upside. And I actually want to see prices to actually come back into this imbalance to revalidate this level before any possible continuations for the buys. So I'm believing that we're both seeing the same possible movement and outlook for the GBP USD, right, Dennis? So we could be looking to see a continuation of the current short for the GBP USD. And when I scale to my lower time frame, I'm also seeing this resistance point here as a possible area for an entry for the GBP USD with good risk to reward.
So you're looking at bullish or bearish, right?
I'm looking bearish.
Bearish, okay.
Yeah, I'm looking bearish
Yeah,
back to this
another
level.
risk factor to watch out.
Yeah, Dennis?
Okay.
Then
We have British municipal elections coming up on Friday. Yeah, so that's also another risk factor for the British pound to watch out for. So it will be interesting to also switch up and maybe look at how they are, because those elections that are coming up on Thursday, the polls are already out, and they suggest that the current sitting prime minister's party, that is the Labour Party, may face a very, very significant setback. Remember, even last week also as well, the Bank of England was having a very difficult, according to what the governor was saying, it was a little bit difficult to decide as to whether they should keep interest rates on hold or not.
yeah,
And the markets are currently pricing in a 50% chance that the bank will hike interest rates come June, obviously due to the inflationary factors that are currently being sponsored by this conflict that is happening in the Middle East. So it will be
yeah,
interesting to see whether that will continue adding, this macroeconomics and the politics and the geopolitics will continue adding that bearish pressure to the British pound. Yeah, that's
yeah.
something to consider that
Yeah,
I'm considering.
I
Yeah.
was just about I was about to add to that because one of the things I have noticed during elections here is during elections, one of the things you'd notice is currencies start to weaken, yeah, because there's a lot of internal spending happening, rotating of liquidities and all of those things happen during elections. But as well, you also want to pay attention to what side of the election seems to be more favorable to the current economic situation. So if the opposition party, for instance, is leading the polls like you claim, right? And they're showing more strength to supporting better economic reforms and activities, then you're most likely going to see people start to pay a lot of interest into the pound. But definitely it's an election period, so you're going to get a lot of skepticism, right? And people trying to hold back uncertainties. So what you're most likely going to see is some sort of consolidation around that particular currencies. But depending of what direction the market decides to go, regardless, at the end of the day, trading is all about risk management, right? As Manesh would always say, once your risk is determined, then your trade is set to go, right? So whatever the case may be, the trade we're taking, we're going to be using a very good risk to reward stop. So this is a very good 1:4 risk to reward on the GBP USD, and we need to get to entry points. We need to fail to break above these highs first of all before we decide to make entries on the GBP USD. And that is, my general outlook and direction for the week on this certain markets. Manesh, where are you at currently? Any
No, I mean,
decisions this week, or you're waiting till next week?
no, I agree with you guys on the dollar and especially the pound USD here. It ran into a major resistance around 36.40. And then it's at a critical support right now on the 4 hour. So it's bearish overall. But as we talked about earlier, it's decision making time for the dollar and the global markets by the end of the week. What's it really going to do? Right. So this week, by Friday, we should get a little better picture of a long-term view of the uh, dollar and the U.S. stock markets.
All right then. So, Dennis, do you have any expert advice to give to the traders on the call because we're about to hit New York session, and like we always say, Manesh, no matter how much you tell traders to sit and wait, there are always going to be people wanting to take a trade, and we can't stop them from taking that trade. So it's about New York time. So, Dennis, any advice you want to give to the traders today? Dennis, you're muted.
So basically, any advice that I would have for traders, obviously, is just to echo what you guys have said. What we have discussed, it's for traders to just maintain patience, stay patient, and importantly, closely, if you are day trading, that is, if you really are day trading, closely monitor the situation. That is the monkey that is out there. Everyone is monitoring the situation. So, so you should all closely monitor the situation. See whether the narrative is going to change. But when it comes to positioning right now, it's important to position yourself in accordance to the market narrative. And the market narrative on an intraday basis today is the markets are very, very risk averse. They're very, very risk averse. So any risk asset, when it comes to forex, that is the AUD, all of this, it's something that, of course, they should look into seeing whether they can be able to get in, some short trades there if the narrative is maintained. And obviously, as the week unfolds, we're going to have NFP coming out at the end of the week. So if you can reserve some bullets for NFP, if you can reserve some capital for NFP if you're trading intraday, then of course definitely that will be very beneficial to you. So yeah, that's essentially my advice, I'd say.
All right, and thank you, Dennis. So for my insight for today, yeah, for anyone who would be wanting to trade today regardless, you would want to be looking for opportunities on the XAUUSD, but managing your risks very tightly and closely with risks softly above the 4,587 levels and targeting just the previous low, considering this lows coming in from last week. So we want to play the potential daily array game for the XAUUSD to just target the previous lows from last week as the start of the market. Unless that being done and you feel like you do not have enough risk to lay on the trade, please remember this is not a trading signal but just a trade idea. So your risk management should be your major priority, and also do your own research to make sure you're in alignment with whatever trade you are seeing on the chart this far. Manesh, anything you want to add?
No, I think we've done that. I mean, we've gone through doing the analysis on everything, like we said.
Yeah.
Long-term bullish on Bitcoin, bullish on gold, bearish on gold and silver, and then the U.S. stock markets. We were bullish, but now we're at the point where it's overexhausted, overbought. So, that's where we're looking for a counter trend trade for a pullback and stuff like that. And then the dollar is getting stronger, as we talked about, but it's critical week this week.
Thank you very much, Manesh. So with that being said, guys, I want to say thank you for joining the live on ValeTalks again. It's always a pleasure to have you guys. Don't forget to be trading with Valetax. We have the best spreads and best opportunities that you can get on any brokerage firm today. We have our ECN account starting at 0.0 spread size with just $50 deposit to get started. And after that, you can deposit any amount that you want to. We have one of the best market conditions, instant executions, and we also have competitions and rewards for you to get started with as a trader and also as our partner. So if you've not used Valetax before, head straight to our YouTube channel, click the link in our bio to get registered with Valetax and start trading. And until next time, we'll see you guys on ValeTalks. Thank you so much for joining in today, Denis, and thank you so much for joining in as well, Manesh. See you guys next time. All right, cheers, guys.
Thank